All right, everybody, welcome back to Mining Stock Daily, and good morning. We're kicking off our corporate updates today with the Sudbury Basin and Magna Mining. They trade on the TSX now with the symbol NICU and on the OTCQX with MGM NF. The company did publish their Q2 operating and financial results last night, and we're able to digest them and kind of come away with them with a great quarter. Things are really starting to move in the direction the company wants them to. Happy to welcome in CEO Jason Jessup for this update. Jason, congratulations on really what I personally think is a defining quarter for the new Magna Mining and everything in production there at McCreedy's. So congratulations.
Well, thank you very much, Trevor. And it's an exciting quarter. It's great to announce these financial results. And I think it's a real sort of turning point and, shows that the McCreedy West mine is on track.
Yeah, absolutely. And I think the defining data here, people, to back up what I'm saying here, is you swung from almost $20 million in the red in Q1 to positive $5 million in Q2. How much of that is structural versus perhaps a copper price tailwind? And is it representative of really what a steady state McCreedy West looks like?
So there's a couple factors. First of all, we had a tremendous production quarter, setting a record at over 98,000 short tons. Mined and shipped off to the mill, produced 4.5 million copper equivalent payable pounds. So it was a great quarter. Our grade was really good, sort of in the midpoint of our guidance. So that had a big impact on it. Obviously, we are watching costs. We're trying to manage costs as we continue to invest in our operations and projects. One other factor that played into it is we did have some payments that should have came to us in March that came to us in April, which helped Q2 as far as that free cash flow number. But it was overall, our best quarter for sure. And metal prices pulled back a little bit over Q1, so we did fight a little bit of that tailwind with some slightly lower price, especially on precious metals. And but yeah, overall, by far our best quarter to date.
Okay. Your cost trajectory is also positive. Per ton costs have now dropped 3 straight quarters, now sub $200 per ton. Is that a floor, or do you still see room to push lower as everything continues to mature?
Well, definitely, I think as we bring new operations, online and we find new efficiencies and ways to share some of those costs, I think our operating costs can get lower. Now, there are a portion of our costs that are fixed in that our milling, we do not benefit necessarily from any economies of scale. We sort of have fixed milling price per ton, fixed trucking price per ton. So we don't have a lot of advantages as we increase production on those. So there isn't, I say, a tremendous amount per ton of cost reductions, but I think there will be some.
Okay. Let's talk about Levack. That restart decision is somewhat imminent, although there is a PEA still in the works here that will be needed to really make that decision to green light that restart. You noted that 2950 drift is getting pretty dang close to the R2 Footwall Zone, where we've seen tremendous results with the exploration drill rig there. In fact, that could really open up Levack. Is there a hurdle rate or other gating factors beyond the economics that you need to reach to really bring home that PEA?
I think that as far as the PEA, and I've said this many times and I'll keep reminding listeners, the PEA will be based on the resource that we released last fall for Levack mine, will not include the R2. But right now, I would have to say we are the most excited about R2 over any other part of Levack. It is tremendous upside and potential. And once we have the PEA out, I would expect that we'll continue to advance Levack, and at that point, we'll be able to, make a formal decision, either, immediately after or sometime after that PEA comes out in September. As far as that 2950 drift and, the what it will provide us for R2, as well as other exploration, I think it is extremely exciting. It not only gets us within 300 meters or less from the R2 zone to drill more horizontal holes, so very good angles, um, closer holes, be able to get much more definition, which is really what that zone needs. We have 14 holes we've announced. I think we've drilled maybe 17 or 18 holes into it now. Um, we need a lot more holes before we can come out with a resource. So that drift will be very key, but not only just for definition drilling, defining and expanding on R2, but also testing other very exciting footwall targets. That drift, which really spans between our Morrison deposit, which was the original big FNX discovery that operated up until 2019, and our R2, there's about almost 600 meters in between those two zones that really did not have good platforms to drill. Even from surface, it was very challenging because of some of the mined out workings up above. So it is a area that has very, very few holes in it. We've drilled a few holes now from different places in the mine, done some geophysics, definitely have developed some targets and some EM anomalies. And this drift will allow us to test those as well. So it is a exciting drift. And, I think the best part from a mining perspective is once we've done this definition drilling in R2, we can just extend that drift, touch the R2 mineralization, start silling on it, potentially as early as Q1 of next year, and start generating what I think will be some very high grade mineralization that we can ship off to Vale, and also better define the resource or define the deposit so we can have a resource estimate potentially by the end of 2027. So very exciting area. Glad to see the drift going well. It's a real highlight anytime I go underground at Levack is seeing that drift advancing. And now that we're going to get diamond drills in there, it'll be really exciting over the next month or two.
Jason, is this PEA going to be, you mentioned September release, is this going to be one of those Beaver Creek specials again for Magna Mining? I mean, you did it a couple of years ago with the KJHM announcement. Is this kind of what you got up your sleeve, timing-wise?
Wow, I can't give away all of my tricks, but it could be coming out at a very opportune time for some marketing conferences, and we'll just see.
All right, very good. All right, I'll leave it at that. I do want to go back, and there's a few things from the Q2 numbers that we actually had some further up questions, and really one of them was about the silver production coming out of McCreedy. Production went up, but silver revenue was down. I mean, we're kind of getting into the weeds here, but what's the explanation with higher production, lower revenue?
Lower silver prices over Q1 for sure. And not only just silver prices, but we have a delay in when we get paid for silver. So what happens every month with our accounting, we ship a certain amount of ore at a certain grade to Vale, and then we book what that should be worth at the price at that time. And then every month we have to adjust for changes in the price, the market to market adjustments. So when you have silver at, extremely high prices back in January and February, and then slides down to where it is now, there's adjustments to be made. And those adjustments come right off of what we actually generate. So lower prices and adjustments is the reason. And likewise, when prices go up, there's upward adjustments because what we actually realize and get paid is higher than what we had booked. So we do have that adjustments, just the way we get paid, but prices is the biggest factor.
Okay. A staff member of ours and also a shareholder of Magna, as I am as well, wanted me to ask you about the rising mill and smelter treatment charges. Those were significantly higher this quarter. Can you explain those?
I can in general terms. Some of it's confidential, but basically what we've been working on is some adjustments with Vale in our contract that we think will have net benefits to Magna. on how we get paid.
Mm.
And some of these, adjustments were retroactive back into Q1. So when we finally settled them in Q2, there were some additional payments due to Vale, which made our costs for Q2 look higher. Um, I would expect that those will be normalized over the rest of the year, and going forward, I think we'll have a net benefit to Magna.
Okay. This is a defining quarter for Magna, and I think now the expectations we see quarter improvements. Jason, obviously the Levack coming online. Crean Hill we haven't actually talked about yet in this conversation, but that's well on its way as well. Given what you've heard over the last, less than 24 hours since this was published, what are the expectations for the remainder of 2026 and what you've heard overnight?
Yeah, it's a good question. And, I can't speak to it very broadly. It's been very, short period of time since we put out these results. And we have been in contact with some of our bigger shareholders as well as a number of the analysts. I think that what we've been guiding for is what people are expecting. So we are going to, maintain our guidance that we put out in February for the year. So 16 to 18 million payable copper pounds, and at the cost that we had estimated. So sort of 340 to 380 US per copper equivalent pound, and then an all-sustaining cost of 420 to 470. That is, I think, the expectation. Now, people are still on the fence a little bit on what will Levack and Crane Hill bring to the company as far as a production plan and revenues going forward. I think a lot of people are still waiting to see what the PA and the PFS at Crane Hill will bring out.
Mm.
In September, what we'll be able to report from them. So I do think that there's still a lot of work to do to communicate to investors, what our production plan will look like and then growth we'll have. I'll tell you right now, Trevor, internally, we are super excited, and those that have signed NDAs and seen our plans are excited. And I would put Alpayana in that category, and it's one of the
Yeah.
reasons why they've invested in us and are going to become a major shareholder. So I think expectations are still a little bit on the fence. I think people are a little bit still wait and see, and the ones that are doing their homework, and I think investing now, I think they have a good entry point, in
All
my
right.
opinion.
All right. Very love to hear it. And I will say, every time you and I have an audio podcast and the question opens up about the future of Magna, you usually answer that with a huge smile on your face, and as you just did. So I'll let people kind of visualize that. The one I wouldn't call it big surprise. I mean, but it was a surprise that was mentioned here. New CFO. Greg Huffman, our friend Greg Huffman, moving on from SVP of Capital Markets, taking that chief financial officer role. Is this guy even qualified, Jason? I mean,
Well, the short answer is yes. Um, but it was Scott had communicated to us, when we hired him a couple of years ago, that this would be his last job. He was, going to help us get through the transition with the KGHM acquisition, which was huge and a lot of work, and help us get our systems, our ERP, and everything in place. But he sort of had a limited timeline to retirement. So we've been, discussing that internally at the board level, and how we'll replace Scott. We have explored, external candidates, but
Mhm.
I think we have a extremely tight knit, and I'd say team here at Magna. That includes the finance team, capital markets with Greg, Paul Fowler, and I think bringing in some more external executives, I saw it as a little bit of a risk in that, are we going to lose some of our other people, or how do we manage this? And, Greg was such a great natural fit, and he's been working alongside in the background with Scott and our team in finance for a number of months now. in anticipation of this announcement and taking over the CFO role in the future. So I'm very confident in Greg, and I know he's supported by a great finance team here at Magna. So yeah, no issues, and it's really exciting. And with that, Greg will also continue to be very much investor facing as the CFO in the future. So I'm excited by it. I think it's a great fit, and it really complements the rest of the team.
Yeah, I would absolutely agree. And I think it also is representative of the culture that you have created over the last couple years there at Magna. And it starts where you guys are at in the corporate offices there, and it goes all the way down to the face where people are driving the drift, and I've seen it. And so kudos for, making sure that that is always number one reason why you make any decisions, not always just financial. It is culture is also very important to what this company represents externally, but also, for the Sudbury Basin as a whole. So yeah, I think it was a great decision here, and congratulations to Greg for taking that role on. All right, Jason, you and I will be chatting late next month at the Beaver Creek Precious Metals Summit for sure. Perhaps you and I get one more in before then. We will see, but congratulations on a great Q2 and more to come, and hope you continue to do it with a smile on your face.
Yeah, thanks a lot, Trevor. I think we'll have some good news to talk about at the Beaver Creek and maybe sooner. So thanks a lot.
Yep. All right. Magna Mining trading on the TSX now with NICU and on the OTCQX with MGMNF. The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.